All right. So tomorrow we have CPI data in the morning, and then we have FOMC in the afternoon. So it should be a very high volume trading day, which means it's likely going to be extremely volatile in both directions. So today we'll talk about how you could trade it, what levels to pay attention to, and what I would be focused on. So first we'll look at SPY, and it was up 0.25% today, and we did hit the price target. You could see by the arrow, I thought we would get a pullback, the buyers would step in, and then we would get that one more all-time high to 537. And I do believe this is a very important price target because there is the possibility this is the high before we need some type of major correction or pullback. However, we need price to do all the talking here, which means if we do start breaking above 537 tomorrow, there is a good chance we will start to push higher towards the 540s. So 537 is a very critical level. There is no reason to believe we need to break above it, so make price action prove it. And then of course we are still in a bull trend, so the best trades are still going to be buying the dip. If you are shorting this, it is possible to do, and I do think it's low risk up here, but you will want to take your profits at support because we are in a bull trend. So 537 is a very critical resistance. If we can start clearing above that, we'll be looking into the 540 zone. And then below 537, if we get a rejection, we're looking for support right around 534 and 531. If the bulls lose 531, it's because the bears are very powerful and the bulls are retreating. And that will be a risk off look, and it likely means SPY is going all the way back down into the 520s. So 531 is your critical risk level for the bull trend, and we have all of the levels above it for resistance and support. Watch those levels throughout the day and make sure you have a trade plan if you are going to trade tomorrow throughout the volatility. Otherwise, if you're a bull, you can continue to swing trade your long positions. Just make sure you're managing risk. And right now, I would up your risk level to about 534, but you can continue to use that level at 531. So do expect plenty of volatility tomorrow. I do think we're going to see the volume down here picking up, which is going to lead to more high volume trading, obviously, and that's going to start moving price around a lot more rapidly. On the NASDAQ 100 triple Qs, we were up 0.69% today, and you could see here I thought we would go higher towards 466, and because Apple had such a bullish day, we blasted right through 466, and we went all the way higher to the next price target at 468, and we did close outside the upper Bollinger Band. So yes, we are still in a bull trend, but this is a very overextended look in the triple Qs, and we are sitting at resistance at 468, which means if we break through 468, then and only then will we be looking for the next price target at 470. I will not assume we are going straight there because it looks like we need to cool down, and the cool down from this level would bring us back down towards 466 to about 464. Above 464, we still have the bull trend, so use it as a risk level, but do not be surprised if we pull back to it. And if we break down below 464, we're likely coming all the way back down towards 460. And then below 460, we're getting a weak bull trend that is rolling over and getting ready to die. And that means we're likely going down towards 453 to 455. So in the coming weeks ahead, I do think there's a good chance of a pullback, but we need price to do all the talking. And the first sign we are getting weaker in this bull market will be a break and close down below this 5 EMA. And that is going to be a breakdown below about 464. So pay attention to price tomorrow. It's going to be very volatile, and it looks like we have a very large range here between 463 and 468. On the Dow Jones, we were down 0.34% today, so the Dow Jones continues to be the laggard and the weak index here, and we are still barely holding that risk level at 387, and I told you if we close below that, it would look like we're risk off, but the bulls did everything in their power to get back above it by the end of the day, and we did close above it. But it is very difficult to say that this is a bullish looking chart, but we are still above 387, so we can give the bulls the benefit of the doubt. But if the bulls cannot hold this support tomorrow, it is very likely we are going to flush down towards 377. So manage your risk right there at 387, and the critical resistance to the upside is still 391, and if we break 391, it will look a lot more bullish. On the Russell 2000 IWM ETF, we were down 0.62% today, and we did hit the support yet again at 199, and we're still going down near this lower Bollinger Band and continuing to find buyers. And the more we can find buyers at this support, the more likely my arrow will work out, where we bounce off of this zone between 198 and 199, and then start running higher towards my price targets between 210 and 214. So I'm still very bullish on the small caps as long as we can hold above this critical support, but if we do break down below this critical support, you will need to manage risk and start getting more risk off. On the ARKK ETF, we were flat on the day, going absolutely nowhere, and we're staying risk off below 45. So while we're below 45, this is still a bear trend, likely going lower, but if we can get back above 45 to 46, then and only then will we start to look a lot more bullish. On the VIX, we were up 0.86% today, and the VIX is still very low down here below 13, and this is still a very low fear environment, which is going to support the bulls within the bull trend. But tomorrow, like I told you, there will be plenty of high volume trading, and we could see some fear, which could lead to volatility, and in that case, I expect to see see the VIX spiking. So I'm going to give you a little bit of a prediction here. I think in the short term, we are going to see some volatility, and I think the VIX is going to start rising towards 15 over the next week or two, and that will likely lead to some type of pullback towards support in the indices. So watch that very closely and understand while the VIX is this low, you can still get cheap hedges. On Bitcoin, we are currently trading right around 67,000, and yesterday I was telling you it looked like we had this sort of double top look from 71,400, and today we did get some confirmation with the breakdown because we did spend lots of the day down below the neckline, and that neckline is the support level at 67,400. Now we do have a support and a retest here right around 66,000, and I told you you could stay bullish above 65,000. So you really need to understand how you want to manage your risk here, because you do have a risk off look with the double top, but you are still above the risk level at 65,000 and the retest at 66,000. So I call this no man's land, where I just sit back and watch because I don't have any clarity if we're going higher or lower. We have the bearish double top, but we also have a retest of a bull breakout. So you figure out how you want to trade this. I could understand either direction, how somebody could be bullish or bearish. And when I don't know and I don't think I have an edge in a trade, I simply just sit back and watch. On Nvidia stock, we were down 0.72% today, and the bulls are trying to hold above this rising 5 EMA, so it is still in a bull trend. But as I continue to warn you, after the split, it is possible the split is going to be a sell the news event and we get some type of major correction. So manage your risk down below the resistance at 122.6, and while we're below that, if we do break down below the 5 EMA, it is possible to come back down here towards 115. If we break 115, look for 109, and then below 109 we have a gap fill just above 106. If we do start to break back above this resistance and you want to stay bullish, that's completely fine, but just manage your risk at that daily 5 EMA. On Tesla stock, we were down 1.8% today, and we lost that very important support at 173, and I told you below 173 we need to hold support at 167, or it's going to look like a risk off bear trend. This is where the bulls are going to look for low risk opportunities to buy the dip, but if we do lose that support at 167, it will look risk off, and that means we would continue the bear trend down to the lower target right around 160. So if you are buying the dip, understand that this is where you would need to manage your risk, meaning if we continue lower, you need to manage your risk accordingly. And I'm doing a very simple trade plan here. I am not getting bullish unless we can break above 180 and then 185, so I am just going to sit on the sidelines until we can see the bulls proving it by breaking above that resistance zone. On Apple stock, we were up 7.26% today, so this was by far the behemoth moving the market, especially when we're talking about SPY and the triple Qs. And this is the day after the Apple event that showed their Apple Intelligence, which is their new AI model of how they're going to enter the AI space. And we did get that pullback down towards that support at the rising 20 daily moving average, and then had a very outsized move today where we're outside the daily Bollinger Band, and we sliced through two critical price targets at 198 and 204. And above 204, it's possible we climb higher towards 208 and then 212. Now we are very overextended outside this Bollinger Band, so don't be surprised if we get a pullback, and that pullback would likely take us down towards 204 down to about 198. Now this is a very bullish move, and it is a brand new all-time high, but this is where smart bulls will start to lock profits, so don't be surprised if we spend a few days consolidating this move if we're going to go any higher. Otherwise, we may have just seen the top in Apple before we see a correction. So yes, Apple is still looking bullish, but this is definitely one of those moves that I would not be chasing. So jumping back over to the S&P 500, without a doubt, this is still a bull trend and a bull market, but we are getting closer and closer to prices that I would say it's very risky to start chasing at. So if you are buying long positions here, make sure you are managing risk around the critical risk levels that I'm giving you, and try to make sure you're only buying the dip near support. It is very risky to buy breakouts and buy highs here, because then if we do get a sharp reversal, you are going to have the maximum risk possible. And I do not believe that is a very profitable way to trade this. So you're looking to buy dips in a bull market, sell at resistance to lock those profits, and just continue to move like water. And make sure you have a plan if we do start to see a high volume reversal and we see the bears coming in high volume, that you know exactly how you're going to manage a risk and don't get caught holding any bags. Go make your trade plan right now and make sure you're prepared for any of those scenarios, but definitely do not rule out the bear scenario, because as we continue to go higher, they could show up at any point. And when the smart bulls start selling, they are going to put a lot of downward pressure on the market as well. If you want to come crush the market, consider joining the Stock Channel Discord server, where you get access to my trade ideas, all of my technical analysis, and my intraday updates. And you can find out how to join the Stock Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.